Good morning, traders. I'm wanting to piddle around here with a little bit of micro scalping. Send them a practice account. Not going to risk any real money on it, but one of my most popular videos was micro scalping. So the hypothesis behind it is each one of these wicks has orders there, and whenever they're filled, it'll either pop up or pop down each time it hits one of these wicks. And so we just want the market. We don't worry about getting involved in that. We just want it to fall into a range, and then we play that range. And we're only going to try to get 5 points. Now for this, I'm on the big contract NQ. And for 5 points, $5 is all we want this thing to move. I've got my take profit set at $500 and my loss set at $1,000. Okay. So I'm thinking the top of this wick is a target. So I'm going to sell a buy order. Oh no, a sell order. We're going to sell 5 bigs for a 5-point bounce down. So if it fills at 68, it needs to get to 63 to fill us. If it comes all the way up here, we're going to lose $1,000 immediately. So let's see what happens. All right, it took that high. Let's get a little pullback. Even with fake money, it's scary, isn't it? All right, there's our pullback. So just like that, $500. Isn't that pretty cool? That's a lot of risk, though. $1,000 on a 50K combine, you don't want to risk that much. But you can do it with a 150, possibly. So now I was doing it with micros. Now I've upped the game, and I'm doing it with this. That's one trade, $500. Close your account. You're done for the day. Lock that son of a gun. Because the reason I don't trade this way is because I like, oh my gosh, I just made $500 in 3 seconds, and I want to do it again. So that's the danger of trading this way, is over trading, because my stop loss is at 1,000. Excuse me a minute. All right, so yeah, my stop loss is at 1,000, and that's the reason being is because you don't want it to clean your account out. So what could we do now? We got our 500 for the day. We can lock it. If you're in an XFA, you can just shut it down for the day. That's a qualifying day for a payout. You can just leave it alone. But to me, we haven't run liquidity necessarily. I had it marked out on the macro chart. But if you look at the 15-minute, we have liquidity right here. That would be a real good place to try to take a 5-point bounce. But it may push through it with authority. So you just don't know. But that's the danger for me in trading this, is over trading. Are we taking this low? Absolutely. Are we going to go all the way back to round number prior to? Maybe. In this environment here, it's real easy to say, oh, I'm getting short right here because we're going all the way down here. With the micro trading, you don't have to worry about where it's going. You just want to worried about what happens when it hits that wick right there. Is it going to pop back down? What if we take this one next? That's at 75. 80 is a big bounce. What if we go all the way to 80? What if we take this one right here and then bounce straight back up like we just did? Let's try it. Oh, it almost got there. How many did we buy? We bought 5, yeah. There we go. So there's another $500, just like that. So the next wick we could possibly bounce at would be this one, because I do think we're going down here. I'm thinking up here around the 80 mark, or these are absolutely equal highs. I'm thinking I'm going to just sell 5 right there, because this is developing a nice little range area here. All right, so there's another $500. Very simple, very easy. So we're doing good. It's looking great. We're up $1,600. We haven't been in the market but a few seconds each time. One loss, and we're back to $600. So maybe now would be a good time to scale down, in which case you would need to change your parameters. If you're just going to do one big contract, you're looking at 50 with no, you're looking at 100 with a $200 stop loss. So I don't know if it'll let me change it or not, but I'll try. So $100 take profit, $200 stop loss. See, my ribbon, whenever I'm recording, is right there. That would be a way to control your risk if you wanted to take a few more trades and then just add to your money a little at a time. And also in your trading combines and things like that, you could put a trailing max drawdown, so you don't, because it's very easy when you've made that much money that quickly. It's very easy to want to continue and have a $20,000 day, and it's highly unlikely that will happen. You'll probably end up losing. So you lose one, and now you're down to $600 at the where we were. It's not going to let me save this, so I can just show you how it works. Let's go back to there. I think my parameters are still the same. So yeah, we'd be trading 5. We took that low. Round numbers, a great bounce spot if we make it to it. So I'm gonna do 5 there for a 5-point bounce. If we would have put in an order to bounce at the 20, it would have filled. I don't know if it would have made it or not. I know we have a possible breaker forming right here, but I'm not trading NQ today, so I'm not going to mark it out. Just making this video for you guys. That's all I'm doing. Let's see if we can get the round number and get another $500. We blow through it, we're down to $600. Might could have got a bounce off that wick, but not looking like it. Come on, poke that round number. Yeah, we definitely could have got a bounce off of that wick. We would have been good for 500. There's the round number. We're going to blow through, or we're going to get us, there's 500 more. Man, isn't that easy money? And we are risking 1,000 each time. So you mess up one time with a 50K combine and half of your max loss is gone. So you wouldn't want to size up that much. But with this, yeah, very common for it to go back to 20 and then right back down. So we're going to sell 5 if it hits it. There we go. Let's see if we lose 1,000 here. Our stop is right at those wicks. We got filled at 19 and some change. Very common for it to range between 20 and round number. So I'm a little nervous about this just because our liquidity is here. And if we lose it, we lose $1,000 just that quickly. Yeah, we did. So liquidity's here. We can sell 5, and this is how our $1,000 hurts us. We're about to be dead even from over trading. We got 500 of it back. So now where do we go? I think now we probably need to wait for another range. We got a new liquidity. We have a breaker here. This could possibly be a reversal point. We took out the low, most recent swing low. We also have on the 15-minute chart a fair value gap right here. And the low of it is right here. So it may want to fill that in. So we could have more downside. But where we stopped here before is just about the halfway point of this fair value gap. So if you're looking for long-term, big money type of thing, our candle bodies just dip slightly below it there. It's sitting right at it now. Oh, we're below it. We're well below it, that halfway point. So the potential of this filling the entire fair value gap is pretty high. So I would say that's our next aim point right there, 15-minute fair value gap. I have all this marked out already on my MNQ. Let me star that one so we can get back to it here in a minute. So MNQ there, I already have it all. But my hypo for the day is if we trade up, we're going to probably go into this gap. It is earnings day, so for Tesla and a lot of the magnificent sevens. So we could trade down here, take out some lows, and then rip higher the way the market's been doing lately. Anything's possible. But right now, it's looking like a sell-off. It may not go higher until after the earnings report. I still have an order in over here on the micros. I need to kill that. But that's the basis of what I was trying to show you with this micro thing. You can make a lot of money. You can also lose a lot of money in a hurry. So right now we're trying to aim back to round number. I'm going to go ahead and put in a buy once we hit it right there at round number, right here at the bottom of those wicks. Thinking we're going to stay in this range. We've been in it for now about 6 minutes. We typically stay in them maybe 10, sometimes 15. You could also sell short at the top of one of these, but I think this is a good draw, a double bottom, popping it, going back up, but we could pop it and go right through and lose another $1,000. Let's see. I'm thinking it's liking this range right here, and we'll be here for at least another 9 minutes. It's accumulating. I'm going to go ahead and try to sell 5 there as well. And whichever one gets taken first, be just fine. Man, I should have put it right there at the top of that wick, I guess. Pop that wick. There we go. Now rip back down. There we go. So there's another 500. Now, can we do the same thing at the bottom? From my experience, this 1 minute chart works best. You can do smaller time frames and find even a smaller range to go with, but you want clean lines. Right now, so in this last couple of minutes, we got highs here, lows here. So you could try to play off of those, but from my experience, we are going to refer to this 1 minute deal. We could put in a sell 5 right there at the top of that candle. That's at 36. It's possible it could rip back down when it takes it, so we'll try it. It could rip right through and give us a $1,000 loss. So it's just risky. You don't have to even leave it on until it takes your profit. If it pulls back and you're up $200, you can just take it. There we go. So there's another 5. If we would have had an even 1-to-1 there, we would have lost that trade. I believe it. I don't know if it went all the way up 500 above or not, but so this is looking almost like we're having a reversal pattern here. So here's our breaker. It would be a good time of day for it to reverse. It would be our bullish breaker right here. Let me make it bigger. And right here. We want candle bodies to push through with a fair value gap, respect it, and then we're going higher. So I'm going to put one right here for a bounce to see if we can get another 500 smackaronis in Monopoly money. I said we pushed through with a fair value gap, but we didn't. It filled it back in, so there is no gap there. We took this wick, have not bounced yet. This looks like it's going to be a loser. If we would have only left it at the 100, at the round number, I think would have been all right. So there we lost 1,000. Daggone it. We're starting to violate that breaker. Not quite. So we lost 1,000. Let's try round number, bounce again. Take these wicks, we bounce. That red line is that low we took. So with that loss, we're sitting at $1,400 to the good. Think we would take 5 and not go to round number and bounce back up. We could possibly take 30, rip back down. I just don't like seeing those big candles there. I'll try one there. We'll sell 5 when it takes that wick because it's lacking this range real well. Right there. The suspense is killing me. All right, we're going to rip or we're going to pull back. Overtrading is definitely a big problem with this type of scalping because it's so easy to make that money and it's so easy to lose that money. It looks like we're going to lose it. So we're way up here. How could you prevent that? Put your order up there. Because I guarantee you once it pops out when it's coming back. So we could have mitigated there and just killed it when it got back to our entry. But it still may be a winning trade. Let it play out. It's really lacking this range. I don't like that it didn't go all the way to it right there. There we go. All right, so that one was a winner. I'm thinking we're going to that higher hanging fruit, so I'm going to put a buy right there at the end of this wick for a little 5-point bounce. Come on, bounce, you dirty rat. Oh, it wants lower. When it doesn't bounce right away, it always scares me. There we go. There's another 500. So we got our 1,000 back. We're sitting at $2,437. It would be a great time to size down. This range is really good, but we've been in here a good while now. It's been at least 10, like we're running into 15 minutes. So personally, if I was actually trading this method, I would want to have the discipline to say, we're about to break this range and we need to stop trading this range or we're going to get smoked for $1,000. But I will try one more at round number. And we may get smoked. So the parameters on this is 5 points profit, no matter how many contracts you're getting, whatever. 5 points profit. 10 points stop loss. Okay. That's the parameters. You want to give the trade enough room to develop without your stop getting hit. That'll give you the best chance. So it's actually a 0.5 to 1 ratio. So you want to be right. At least for 2 rights for every wrong will keep you in the money or keep you dead even. but hopefully you can string together a couple of winners and you'll be doing great. This is $2,400. If you get your first couple right, then you have some cushion you can go on. You could size down and trade it that way. 5 points profit. So if we were just doing one NQ, for example, one full size contract, what would that be? For 5 points, $20 a point, it would be $100 profit, $200 stop loss. We're doing 5 contracts right now, so we're doing $500 profit and $1,000 stop loss. See, that one pulled back right there. That would have been a winner. But we've been in this range too long, in my opinion, so I don't want to risk it anymore. I think, so this video isn't too terribly long. I'm just going to give you a little rundown of what you could do with this concept on a larger time frame. You go to a 5-minute chart and you can say, okay, we got a 5-minute range. Here's some highs, here's some lows. And you could play those highs and lows just to like back to the middle of the range. If we go to a 15-minute chart, you could find a range like here. We got a high of the range, a low of the range, and you could play those as well. Or just this tight little 15-minute range. You could play the high and the low. So now we're dealing with a lot of points here. This is 100 points range. So that way you could make more money if you were trading micros and you played a 15-minute range like that. Let's go to a 1 hour. Okay, so 1 hour, we have a high here that got taken and it came down and it took the low. So the same concept can be used on any time frame. And we got only regular trading hours going here. Let's do extended for a minute for this 4-hour example. So here's a 4-hour range. Let's see here. If you just look at that little section right there, we have a high that got taken and then it came down and took the low. 4 hours a little bit more cloudy. High got taken, came down, took the lows. This one, I think that high got taken. Let's see. Yeah, pretty much relatively equal. It might have taken it by a tick, but definitely the lows got swept. But you can also see when those lows got swept, we pop back up. And that's what we're doing right now. We pop back up. So you could go in here on a 4-hour chart and say, all right, that's our last swing low. We're going to buy one there and expect to pop back up. That pop, how many points is that, son of a gun? Look at that. I don't know if I'd do this on a 4-hour chart. Well, I don't think you really can. That's 89 points on that one wick. So no, I'm not going to go that far in, but it is possible to do it on that size of a chart. Here's a nice little 1-hour range right here. A high got taken, and then eventually the low got taken right there. And that's a big range. So there's more money on the table if you go to a higher time frame. Let's see. We got in there. That's 238 point range. All right, folks. I'm calling it there. Ran out of, it was a 30-minute deal. But the micro scalping definitely has some potential. I prefer doing it where we're doing our little breaker situation. So time of day right now, New York time, is getting really close to where we see our breakers forming. So here's our breaker. We ranged here forever. We pushed through with a fair value gap. And now we've taken out this liquidity. Not quite there yet. If we take that out, it's highly likely this breaker will fail and we'll come back down and aim for the lower low of that fair value gap low. So I'm going to be watching that, and I might go ahead and take a short there for a pushback down through the breaker. Either way, it's most likely going to return to this breaker. If it bounces off of it, then we got a long. So that's what I prefer to trade, just because the micro, you can make a lot of money with this micro scalping, but you can also lose it just like that. So it's all about keeping the money. I haven't in the past been disciplined enough to stop myself when I'm up, but just those little trades we did get back down. But that's $2,000. Are you willing to risk $1,000 on your very first trade? I'm not, but there is potential there. So remember to be kind to yourself and be kind to one another. I love each and every one of you. If you have any questions, please leave them in the comments.